Good morning. I'm Pete Najarian, and this is The Take for Market Rebellion on this Thursday morning, and an interesting morning to start off things once again. And we're picking up kind of where we left off yesterday. Look at yesterday's market reaction. It was really interesting. Seemed like there was two different areas of focus. The virus, obviously, people are getting a little bit more and more concerned, especially as we get into the fall and approaching the elections and the winter months. Also, the stimulus package. Is that going to happen? When is that going to happen? It seems to be part of what is a little bit pressuring on the markets, a little bit concerning for the markets. And then yesterday, wow, in the last 2.5 hours, the markets really did have an acceleration to the downside. And we've watched this to the upside, we watched it to the downside, different time frames. But yesterday, final 2.5 hours, we dropped almost the entire 500 plus points that we dropped yesterday. 525 points dropped yesterday into the Dow. Matter of fact, the NASDAQ was no better. Matter of fact, it was probably even a little bit worse. About 250 of the 330 points to the downside occurred in the final, call it 2.5 hours of the day. So pressure was on. It was not just on in the markets themselves, but also in the commodities markets. When you look over at gold and silver, wow, silver and gold, silver down about 6% yesterday, gold down about 2% yesterday. So a little bit of pressure being inflicted there as well. We've talked about volatility kind of stair-stepping a little bit higher, just a little bit movement up to the upside and testing. And we thought maybe we'd see 30 yesterday. We actually didn't get into the 30s yesterday, actually closed around 28.5. A little bit surprising because the pressure and the speed and the velocity of what we were seeing to that push to the downside, I certainly would have expected to see the volatility index get up and maybe even up and through that 30 level. We did not, but we did get up around 20, a little 29, a little bit over 29, finishing around 28.5. We did have volume, 31.5 million contracts trading yesterday, so a very high volume day again. Over 30 million contracts. Apple, 1.8 million. Tesla, 1.4 million. You had Zoom, 400,000. So a very, very active day. There's no doubt about it. And when you look at the activity pushing on just about every single sector that you could find, pushing to the downside. Energy, really getting hit yesterday. As a matter of fact, all the names that I'll read off to you were down at least 6% yesterday. Apache, Marathon, Valero, Pioneer, Baker Hughes, all of these names, Occidental, all down at least 6%. And then in many cases, far more than that. Then look over at technology yesterday. That was down. The XLK down about 3% yesterday. It's about 17 points off of the highs. As a matter of fact, semiconductors about 20 points off of the highs. That was down about 2.25%. Oh, and on a day where maybe you could say, well, there's rotation going on. No, there wasn't any rotation going on. The financials were also down about 2.25% yesterday, with biotech also down about 3% yesterday. So across the board, we just continued to see everything kind of moving down together. As a matter of fact, in the financials, you look at Goldman and Morgan Stanley and Wells Fargo and Citi and Bank of America, all of those definitely under some heavy pressure yesterday when we're talking about the financials. It was tough to find anything that was really moving very well, at least into the positive territory. Now, in the pre-markets today, we were looking okay. Things didn't look too bad. As a matter of fact, early on, we were actually in the green, but we knew there could be some movements of pressure. We also understand the jobless claims numbers. That's going to have some effects. Well, some of those effects were certainly felt very early on. Matter of fact, in the pre-market, Dow looked down about 160 points. You're looking at the NASDAQ down 150 points. So a pretty significant move to the downside. Well, quickly, as we opened, actually, we kind of didn't look so bad. As we opened, we kind of moved up, pulled right back down, and the Dow down about 165 points. Now it's only down exactly 100 points as we speak right now. We're only 15 minutes into the day. Got a huge swamp day today, so we got to hit this stuff early on. Then look over at the NASDAQ. That was down at the lowest levels down. I saw it down about 90 points, and matter of fact, might even got towards about 100 points to the downside. That has recovered very, very rapidly. So the velocity of these moves, as I said, continues to be something that's amazing. The velocity of the moves in terms of how rapid we are seeing some of the buying and some of the selling and how quickly that can shift. As a matter of fact, just today alone, we have shifted back and forth already, and we watched the Dow actually recover off of those early pre-market levels, only to get pushed back down once again and now rallying back. Now it's only down 70 points. NASDAQ is definitely improving, down only about 14 points. So We look at the volatility index, we got up and over 30, just as we would have expected. As a matter of fact, hit up around 30 and a half, and now it seems as if we are starting to pull back just a little bit. We're already down to about 29 and a half, so we are pulling back as the markets are starting to recover from some of that painful pressure that was being put on. Matter of fact, that weakness, where was a lot of that weakness coming from? Well, Nike, IBM, Boeing, Dow. So you've got the industrial space, you've got consumers, you got a little bit. Apple as well was down early. That's already coming back. But you could see some of the technology pressure as well. The NASDAQ, it was names like Tesla. You look over at the airlines, those were in trouble. You look over at cruise ships, not so good. You even look over at the Expedias of the world, the Bookings.com, hotels like Marriott, even get to the casinos, Wynn, all of which kind of moving, stair-stepping to the downside, giving you a little bit of an indication of what is some of the reasoning behind that. Well, as people maybe do have some of those concerns we were talking about in terms of the virus itself, well, a lot of those names obviously in that category. So that was something that certainly does stand out early on. Take a look at energy, again, under pressure. Now, we've talked about this time and time again, but you look over at the OIH today, it was down about 2.5% early. It's names like Halliburton, Schlumberger just can't seem to be able to fly right. Now, in this early part of the day, we only had one, or 15 minutes in, we only had one unusual option activity, and I'm going to define this one for you as best I can. So I was looking at DraftKings, Penn National under some pressure. DraftKings under a little bit of pressure as well. So what are we seeing today? Well, we're seeing some put buying in DraftKings. And what are they buying? Tomorrow's expiring. Today's already the 24th. Tomorrow's 25th. So September 25th, that Friday, we have expiring the 48 puts. Now, those are going for about $1.10. Stock was trading about $48.58. Are they betting on a bearish side of things, or is this buying of protection? Now, we'll never know the exact answer unless we find out exactly who executed the trade. My gut instinct would be that they are buying some protection. We all have watched as these names have moved to the upside, some of these casinos names, especially those tied to the online gambling and all the rest of that. And we talk about DraftKings and Penn for sure. You look at some of the pressure that they've skyrocketed to the upside. Then you get a little bit of a push to the downside, and maybe some of the concerns there after this unbelievable meteoric move to the upside. And so would this be something where somebody's playing to the downside? Absolutely could be. Could it be something where somebody is protecting a position because they still want to be in this trade, but want to be able to have at least the insurance policy if the trade starts to break down, that they've got some protection there? So I'm not saying that this is an easy trade to define, but I'm just giving you the idea of there are two ways to look at this one. And much more stocks in this world are long than short. Because of that, that is part of the reason why we seem far more comfortable when we talk about some of these call trades versus some of the put trades. In this particular case, are they buying protection? We don't know. It would make some sense to buy a little bit of protection when we know that there's some pressure on that particular industry today. So keep that in mind, folks. That's going to be part of what you would learn if you are with our mentors, some of the great educators that are in the business. Market Rebellion, we, I think, do stand there with the very best. And if you want to be where the action is, if you want to be where the growth is, derivatives world is exactly where it is. It's why the unusual option activity is such a popular thing, because we love to follow it. And it's something we did on the trading floors for such a long period of time, following the smart money. Well, that's exactly what we're going to try to help everybody else who wants to be educated in this world on how not only to position, but how you can follow some of that smart money as well. All the different approaches that somebody could make to the exact same trade. It's amazing how many different ways you can play that. Folks, have a great day of trading. And I'll tell you what, you won't see me this week, but you will see me next week back on the Halftime Report. Have a great day.